Happy Friday, friends. It's Shayan with Integrity Home Mortgage back with your rates rundown for June 12th, 2026. So, conflicting signals this week made it a little bit of a tug of war between data that wanted to push rates higher and events which offered a little bit of relief. And this was all in the backdrop of a looming change at the Fed, which we've all known about for a long time, obviously, but just kind of feels a little heavier because we're only a few days out from their next meeting. But first, our benchmarks 10-year Treasury yields are lower by 4 basis points to 4.48%, and 30-year fixed rate mortgage is better by 2 basis points to around 6.67%. Let's start by looking at the data. We talked a bit last week about the undeniably strong jobs report, which sent bond markets lower and mortgage rates higher. That was followed this week by some really important inflation data in the form of CPI, which seeks to measure inflation on a consumer level, and PPI, which does the same thing at the producer or wholesale level. Remember, the Fed has what we call a dual mandate, meaning they're responsible for two things and two things only. One is ensuring price stability across the economy, that is inflation, and second is pursuing maximum employment. That means jobs. So, with jobs markets looking to have stabilized for the time being, the Fed's left to turn its focus towards inflation. And there looks to be a lot of that to focus on. The good news is that CPI came in right in line with expectations. The bad news, though, is that those expectations were really poor. On an annual basis, consumer inflation hit its highest point in 3 years. Even when stripping out the volatile impact of oil and food prices, we hit an 8 month high. And at 2.9%, we're still well above the Fed's 2% target. Even PPI, which doesn't really tend to be much of a market mover these days, that even garnered some reaction from investors because it hit its highest level since December of 2022 on an annualized basis. The result of all this is that bond prices sort of ground lower and mortgage rates creeped higher over the course of most of the week. And that is until yesterday when the president announced that there was a new peace deal and that it was imminent. And that sent bonds rallying into the close. I know what you're thinking. Seriously, again, but not this time. This time, it looks like there's really some progress being made. We've had officials on both sides and the Pakistani prime minister tweet out that a deal is very, very close. Of course, no details have been released on what it covers and when the Strait of Hormuz might be reopened. And that's why, while we've clawed back most of this week's losses, or at least all of this week's losses, mortgage rates are still higher than they were for most of last week. So that reflects a healthy amount of skepticism still there among investors despite the rally. And that brings us to the last point of the week, and that is the Fed. Given everything we've already touched on, it should be no surprise that markets are placing essentially a 0% chance the Fed does anything to interest rates at all in their meeting next week. But this is Kevin Warsh's first meeting as chair. So the real event on Wednesday isn't the Fed announcement, but the press conference that's going to follow. Any information that markets can glean from his remarks, from Warsh's remarks, or answers to questions, will be scrutinized to understand how this Fed might differ from that of Jay Powell. The reason this is important is because this could really change the way that markets react to news going forward. For example, when Powell was, where Powell was constantly talking about being data dependent, if Warsh comes off as more of an idealistic or forward looking kind of guy, perhaps markets don't react so dramatically with every surprise inflation or jobs print. Or maybe they react more dramatically. Who knows? The point is, I'm not predicting what will happen. I'm just giving you an example of why we're listening so intently and what we're trying to understand. So next Wednesday's event is big, not because of what they're going to do, but what he's going to say. That's all we've got this week, folks. Hope you have a great weekend, and we'll see you next time.